Hello, it's Robert Miner with Dynamic Traders Group with our DT trade strategies for the week of May 3rd. Well, we do a short video for our Twitter and YouTube followers, similar to what we do for our DT Report subscribers, but we condense it considerably. We don't give as much trading strategies and education as we do in our regular reports for our regular subscribers, but you ought to learn quite a bit from these reports. You ought to get a lot out of it, and remember, whether you trade the markets we talk about or not, is what we teach you is applicable to any market in any time frame. I'm going to take a look at 2 or 3 markets that we've looked at recently from a trade strategy perspective and what confirms reversals and that sort of thing. So let's take a look at a couple of markets. We're going to begin with crude. So a couple of weeks ago or so, we looked at crude right around this time where my cursor is, and that it was approaching an almost ideal setup to complete an ABC correction. And a couple of days later, we made an outside 3-close reversal day. That was a trigger to complete the top, either for a short trade or to exit long trades, because it was in a position and made the reversal trigger to complete an ABC. Well, we only went down for a couple of days, and then we made a new high. I'll address that in a minute. But here's the key of what occurred after that reversal day, is that the following day, on Wednesday the 21st, crude closed into the closing range of what I've got labeled a wave A. That's called a closing overlap. It's a signal that crude is making a correction. And possibly an ABC is complete, but if it should continue to advance even to a new high, that should be part of a correction, not an impulsive bull trend. Well, that's what happened a few days later. Crude bottomed, continued up, and here just this end of last week, it went to a new high. So we didn't lose track of the probability that this advance is part of a correction, and when it's complete, crude should continue the bear trend to a new low. Well, as of Thursday, it hit the projected price range, which should be the maximum if it's making a correction. That's right around 100% alternate price projection, 78.6% retracement, as well as the 100% alternate time projection. And then on Friday, we made a sharp reversal. We also made a daily momentum dual look back bear reversal, just like at these last tops. So we've got time, price, pattern, momentum, reversals. And what's interesting now is we're near the maximum of what crude should be on the upside before it completes a corrective advance and a wave 2 or B correction. And this is the first day, Friday, of that reversal signature. So what do we need to confirm that this reversal is complete? Well, just a close below 63.43. If we make a close below that, this whole correction should be complete. And why is that? Because it's a closing overlap that's typical of corrections. And if we make a close below 63.43, more than likely a corrective high has been complete and the bear trend will continue to a new low. So again, we're not forecasting, we're identifying the conditions for a reversal, as well as the limited capital exposure if we wanted to be bearish, get on a short trade or some other bear strategy, is our stop would be no further than just a tick above Thursday's high, because if that's taken out, that voids the idea that this is an A, B, C, D, E correction and something else is going on. But right now, boy, what a setup crude is to take advantage of. So, and you can apply this, especially this daily closing overlap guideline, just really to every market and every time frame. Really valuable to identify if a market's in a correction or an impulsive trend. Here's Bitcoin weekly, probably completed a weekly high and what we call a wave 3 high, following the wave 5 ending diagonal. I won't go into details on that, but that's usually followed an ending diagonal by a pretty sharp counter trend. This is a log scale, and the weekly momentum is bearish, so more than likely we've got another week or two of sideways to down for Bitcoin. Here's Bitcoin daily. I don't have Friday's data in here, but it's data through Thursday. Let me just expand that a bit. So here was our wave 5. We call that ending diagonal. And from the April 14th high, 5 waves down, we call that a 1 or A. We're probably making a wave 2 or B correction that should be complete within the next day or two. The daily momentums are overbought. When it's complete, then we should have another decline, typically anyway, about the same in time and price as what I got labeled a wave 1 or A decline. So it doesn't look like much on this chart, but dollar-wise, that's a whole bunch on the downside, like $10,000 or more. So just be aware of that, is that more than likely we're completing a correction here in the next couple of days. This is the ETF GBTC. I do have the date on Friday. Had a little pop up on Friday. Daily momentum's overbought. Again, another day or two sideways to up, but we close above Thursday's close, and this correction should be complete, and then we should continue the decline in Bitcoin to below last week's low. So again, fair amount on the downside in the next couple of weeks, more than likely at least. Here's gold weekly, gold, silver, GDX in more or less the same position. Gold weekly made a dual look back bear reversal last week, more than likely completed a weekly high, and that should be a corrective high. Here's our gold daily. There's a possibility of a new high. Again, that's why we don't forecast, we identify the technical conditions. As of the end of last week, the daily momentums are dual look back oversold, so we should be within a day or two of completing what we consider a daily low. Should gold continue higher, the limits on the upside should be about 1810 to 1825. That would be the end of wave 5 target zone. If it does continue higher, but we don't even have to guess about that. All we got to do is wait for the next cycle and the daily momentum to make a bear reversal, and because we're in extremes time, price, pattern, and dual time frame momentum to complete that weekly high, the next smaller time frame, which is the daily momentum bear reversal, should put it in a position to complete that weekly high and continue bear trend to below the March low. So have we completed this ABC? Or is it a 1, 2, 3, 4 and make a new high? We don't have to forecast that. We don't have to judge it. It's like I don't know, being trading Zen sort of thing. We go with the flow. We go with the technical reversals, and the next reversal, daily momentum bear reversal, will put the weekly and daily momentums in sync to continue the bear trend. And we're on alert for that because we recognize the advance off of the March low should be a correction, and when it's complete, the bear trend should continue to a new low. And here's the S&P. We've looked at it on and off in recent weeks. As of Friday, we made our momentum, daily momentum bear reversal. This is the SPX, the cash data, and we made the daily momentum bear reversal. And what's more intriguing, though, is the pattern position is more than likely, this is what we call a wave 3 of 5. Won't go into details in that, but it's in a position to make a daily, if not a weekly high. The price position, pattern position, etc. This is 60-minute data. Let me expand that a little bit. From this last low just a few days ago, nice 5-wave advance. And what's significant about this is following Thursday's new high, it came down and traded below this little swing low, which I got labeled as a wave 4. Whether I labeled it as that or not, it's the first time we took out a minor swing low in several days, and that's a reversal signature in most cases. So again, then on Friday, we came down and we took out Thursday's low, only by a tick or two, but we did that with our daily momentum's making bear reversals. So more than likely, we've completed a time price pattern setup, and it's a triple time frame pattern. 3 different degrees of trend are indicating this is a top that's going to last a few days, and it will be followed by a retracement, at least to the 38% retracement, because if this is a wave 4, which I assume that it is, if it continues lower, the minimum retracement should be about 38.2%. That's the only time the 38.2% retracement is valuable. and that's when you're doing a wave 4, the final correction within a trend. And it should continue sideways to down to May 12th. Now, it's not a forecast that's going to do that, but if the market continues lower, money will be critical, then it makes a new low below Friday's low and closes lower. If it does, that's the initial reversal confirmation signal. Then we would, of course, follow the market down the pattern if it does continue lower. But if we reached 40.79, we take a close look that's a possibility of completing a corrective decline. And if it continued, we'd anticipate it would continue at least to May 12th, if not later. So that's it for today. Hopefully you have a fantastic week. Remember, keep safe, get your vaccination as soon as available, wear your mask, help protect your friends, your family, your neighborhoods, your community. It's Robert Miner over and out. I hope you liked what you learned here today. If so, check us out at dynamictraders.com.